The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 189. You get the Nasdaq off 77. S&Ps are off 22. Percentage-wise out here, folks, what we have is that you have the Dow Industrials right now trading down 0.7%. Nasdaq is down 1%. S&Ps are down 0.7%. Gold is slamming that gold market, Tom.
Quite a morning for sure.
Monster. Down 23 bucks, trading at $12.94. We hit $12.91 earlier. Silver down 40 cents, $16.16. We got light sweet crude off 48 cents, $70.49. Now, notes and bonds. You got the 10-year note down 15 ticks, 118.75. That's breaking out the lows. More than likely, it looks like an ABC structure on the way down. At 8 o'clock this morning, we had 800,000 contracts. More than 1.6 million contracts. You got a confirmed ABC structure on the way down. 30 year is teetering right at its actually February lows, down 1.11 ticks, 141.14. And the King Dollar's the culprit here. King Dollar's up 735 ticks, 93.205. King Dollar's going after that December 12th swing high, 93.440, I believe. Let's take a look at it.
I saw that 10-year at 3.06%, I believe. It was the first time since like 2011. I saw a headline, but
huge move, yeah. Right? So 93.480. That's what it looks like it's going after. 93.260 was the high from last week. We hit that. Bottom line is that that December 12th high has been looking to get tested for quite some time. Euro's trading at 118.39 to $1 US. Yen is at 110.27 to $1 US. Bottom line is that we get a lot of red out here.
We sure do.
And so it seemed like it was the sales number. I mean, that retail number was going up, and is that what destroyed the market?
It seemed like it, right? Of course, our man Dave Whitefield in for Larry, and as he was mentioning, it's like, was that the culprit, or was it just, it could have been coincidental almost? Not quite, but right? I mean, it's like the number itself seems like it should not have caused the action that we saw in the market.
And it did.
So just, I mean, yeah. And it definitely, when you tie in, so you had the retail sales rising 0.3%. You had a revision, so that's in April. You had a revision of the March number going from 0.6% to 0.8%. But nothing too staggering in terms of, the type of market action that we saw. Because jumping back, I mean, gold, there's your 830 bar right there. So, yeah, it was trading lower, but that was kind of the acceleration to some larger red bars, going from 1306 all the way down to 1291 over the span of an hour and a half.
Right.
So
as the dollar exploded topside.
Sure, definitely. And all the other indices, pretty similar action, right? There's your 830 bar. So there's your acceleration to the downside that begins. Especially the Nasdaq as you jump over. There's your 830 bar. So again, Nasdaq, we're trading at 69.50. We're now a solid 75 points below that level, and we were even lower. So it kind of did begin then. Whether that's the total factor, well, I guess we'll find out.
Yeah, totally. So let's go over inside the 10-year note for a second. So 10-year note busted lower. You got 1.3 million, so you got to do the volume. It's 1.6 million, I believe, at that last low that we had. Low established on the 25th. Yeah, 1.6 million. So that has approximately it's a 117, I believe, and a half ABC structure on the way down, which would be serious business, because that would put, as you were just saying, we're at 3.05 right now. That we go down there, it's going to be 3.1, which we haven't seen for quite some time.
Definitely.
30-year. Now the 30-year, this will be intriguing to see how this 30-year shakes out, because the 30-year is going after the February swing low, and we did break it. We're right at it right now, 140.114, and it does have volume, So bottom line is we'll see whether that baby holds. And if we go back into the TLT, which is the 20-year plus ETF structure, that gap down $1.23. Now this is going to be a little bit harder to basically blow apart, but we'll see whether, because the low, well, yeah, let's do the last low is 116.94. It hasn't hit that yet. The low that is the low is the 21st, which is 12 million shares. Now it can definitely do the 12 million, but the low of that is almost well 75 cents lower. So it's going to be pretty hard to get to that particular point. If we get over to the gold market, what's intriguing here is that gold is getting smoked, and yet the equities just haven't got toasted yet. Is the primary deal here. The GDX is down 50 cents. You're going into quite a bit of support here, but we'll see whether it holds. Last swing point is at 22.04. We've hit 22.12. Hasn't broken it yet. We take a look at, let's take a look at a couple of these. An Eagle, that's a decent setup. An Eagle actually is down 75 cents. That's not a bad setup. Royal Gold was going after its highs. It's not a bad setup either. Gap down 69 cents, but nothing heavy. Home Depot. So I listened to the numbers when you're doing the news. You know, Home Depot, bottom line, you know, I guess they missed their gross numbers, right? The revenue numbers.
Yeah, and the same-store sales they missed pretty big too.
Yeah, and guess what? It's not down that much.
Yeah, no, rebounded at the open, but these are the numbers that kind of so earnings they came in 3 pennies over the forecast, but you know that's revenue. What are they taking in, right?
Yeah.
That's a $200 million miss. I mean, they're dealing with big numbers, but that's $200 million they thought they were going to take in 90 days that they didn't.
Yep.
And then you know the same-store sales, pretty remarkable. They're growing, right? They're growing for sure, but they're not growing what they thought. In the spring season for them, in terms of people gearing up for gardening, gearing up for renovations. You know, I mean, we can do renovations 12 months a year. Doing renovations up in the Northeast in December, January, not as easy. So as you come into that springtime, and so they were looking for more growth. I mean, 1.2% miss on terms of their growth. It was down much more pre-market in terms of jumping over, but they've definitely rebounded for sure. So there's your pre-market. I mean, we're down there at 185, jumping around on the news, spiked higher right coming into the open, which was interesting, right? Almost back to even, yeah.
Wow.
That's 920, kind of gearing up for it. And then, yeah, it sells off again, and as we speak, though, so it's jumping around. It's trying to find that equilibrium.
You know, and I can understand that realistically because the growth there has been astronomical. You know, because the picture, if we go back to the crash, you know, let's picture the crash started, let's say 2007, really got going 2008, 9. People start doing their houses over again probably in what, 11 or 12.
Sure.
Right? So we're in 18. You get all these houses that are done over. A lot of them are done over now. And I suspect simultaneously, we know that the prices have got higher. So now, you know, things aren't moving as much as they have been.
Yeah.
You know? So this spring is going to be a big deal in the Northeast. And as Tom said, it's in fact, I would say that in Florida, things slow down more because there's less people. Do you know what I mean? Because we can do it year-round. You know what I mean?
Yeah.
Stay right there, folks. Tommy and I are coming right back. And what day is today? Tuesday.
It's Tuesday.
It's
no
Tuesday.
oil numbers
No
just
oil,
yet.
no oils, no volatility trades. Okay. Dow right now is down 184. Nasdaq's off 71. S&Ps are off 21. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 193. You get the Nasdaq off 72. S&Ps are off 22. Let's go inside the Dow and see what we have happening here. So Dow Industrials today only got one positive. Interesting. So your Caterpillar putting a negative 22 points, 3M 21, Boeing 18, Home Depot 18. It's kind of spread around, right?
Yeah, a little bit, definitely.
Yeah. Disney is the only positive out there. That's putting 3 positive points inside the NDX 100. If we take a look at the NASDAQ 100.
That was the Dow, just so you'd said the only one putting negative into the NDX.
Okay. So inside the NDX 100, you got Micron Tech, it's not up 0.9 of 1%. Shire is up 0.6. Autodesk 0.3. Taken away from it is Vodafone's down 4.5%. This is always a hard one.
Mercado Libre.
Yeah, Mercado Libre. That's a big internet company in South America. That's down 3.4%. Nvidia is down 2.9%. Celgene's off 2.7%. Let's go to Nvidia, because Nvidia, that's not that bad. So Nvidia, you know, you got all these highs up here that are approximately $250. We get to 260 on what? That's last Wednesday. You come off the high with volume, now you're back inside the lower range. And so for NVIDIA, now you get game down to 204. This is quite a consolidation. A huge consolidation.
Yeah.
I
think we might have a caller. There you go. We got Jerry from Boston. Jerry, good morning.
Good morning, guys. Thanks for taking my call.
How you doing?
So we've been talking a lot about, or at least expecting, a move down in gold. It seems like we're getting that move down. It's happening a little bit faster than I thought it might. But just curious to. I'm more curious about whether or not this is a confirmed ABC down to the high 40 area, 1240 area.
Yeah,
I don't know. What are you
is.
guys seeing here?
It is, yeah. So you
No, it's not what
I know, man. I know. Seriously.
Careful what questions you ask, man. You
It
just might
is.
get an
It's
answer.
sad.
So.
I know. So check it out, folks. Okay. And what was intriguing is that, you know, last week we busted into the higher range again. Yesterday, coming at 1:30 in the afternoon, man, they just blew apart. Went underneath the 1315 again. You know, you're coming into the swing point as 283,000. Now, even if I take the one right next to it as 370, we're going to do more than 370.
And that's like May 1st and 2nd.
Yes.
Looking at, yeah.
So your A point on this gets up there at 1359. Your B is 1302, so you get a 57.8 A to B, which gets you, what's that, about 1275 or something,
About 1270 for
Yeah.
that one, yeah.
So that's what you have. Sad but true. Yeah.
Sad but true.
Sad but true.
Okay, roger that. Well, we appreciate it. Keep doing what you're doing, guys. We love you.
Thanks, man.
Appreciate it.
Appreciate it.
Thanks,
Take care.
Jerry, man.
It is what it is.
True enough.
You know, so let's go over to that dollar index. So if we look at the dollar, the only thing that could save the metal market at this particular point is that dollar, DXM8. So you get 21,000 contracts. I believe this high had light volume. Yeah, 26,000. So 93,260. Hey, we'll see what happens today. I mean, it tested it already, but it looks to me like you're going to have more volume, you know, than the 26,000. We're only at 1015. It's 21,000. So that still keeps in play this 93,480 number. The thing that's pretty wild is that I guess the way the market's reading this is that, you know, retail sales went up, so we're spending money. And the Fed's going to look at us spending money, saying, "Okay, we can go up on interest rates again." Oh, actually, let's go look at the Fed fund futures and see what happens.
I guess so. The only thing is it came in at expectation, so they knew that yesterday, 0.3%. So there's no startling number when it meets expectation, you know.
Yeah. So the 13th of June's the next meeting. There's a 100% probability there that, or would this be this one? Yeah, let's see. The effective rate. No, okay, it's 70% probability, right? Because we're at 1.7 right now.
Nope, stay with it. There's 100%. Right here. This is the one you want to stay on. There's a 30% chance they go up by 50 basis points.
Okay, cool. Right.
Okay, that's where the two, because right now I believe we're at 1.5 to 1.75.
That's right.
1.7 to 1.75.
Right.
And we're finding, so that's where there's a 100% chance they're going to hike it. There's only a 7% chance they're going to hike it a quarter basis. I mean, that's how ingrained it is. That there's almost a 3 in 10 chance they hike at 50 basis points, which I don't think is too realistic, but that's where those numbers go.
And then the next one, 57% is what, September 26th?
September. So that's where you start getting into, they believe, you know, market Fed funds futures believes there's going to be 2 hikes by the September meeting. Correct.
Well,
yeah. And then if you want to get into it, I mean, you start going right down here in terms of, then you get into about 40% chance that there might be the 3 come December.
that's a big chance, right?
January.
That's a lot.
Yeah.
That's a lot. And then that brings it to 2.2 to 2.5.
Correct.
Wow.
Yeah. From, that would be, 3/4 of a point higher than we're at right now.
Yeah, that's percentage-wise, it's the monster. So let's go take a look at some of the higher volume equities out here and see what we have moving. Bank of America is down 35 cents. You got GE's down 6 cents. That's nothing. Nvidia's a big one. Facebook's down $2. Allergen Technology, that's down 6. We'll pull that up. Oh, that's a spin-off from Hewlett Packard years ago. Tesla's down 6. So let's pull up Allergen. I believe
Agilent.
Agilent. I believe they came out with their numbers last night. Ooh. That's the falling out of bed.
That's for
Holy
sure.
cow. Look at this. So 16 million on a weekly. Yeah, this is going to be an ABC down, a monster too, on a weekly. So approximately 74, about 9 points, 10 points actually. It's like $60. Yeah, look at that. 60 where it went topside the week of May 26th. So their estimate was 64 cents. They made 65. Revenue 1.21. They made 1.21. It's probably forward-looking information or something.
Yeah. Something, for sure.
Yeah. Apple, take a look at Apple. Apple's backed off a couple points. Nothing heavy there. Yeah, Apple's still it's only down at $1.71. In fact, you can make the point with Apple that you're backing into a monster high volume level.
Sure.
$56, 56 million.
Yeah.
Apple doesn't look like it wants to.
No, I was just going to say, it's pretty remarkable. In terms of April 27th, we were down at almost $160, so 186 is nothing to fret over right now.
Seriously, man, right? The rest of the commodity market, let's go take a look at the rest of the commodity market out here. So you got cocoa down 3%, silver's down 2.4%, gold's down 1.8%, cattle's down 1.5%, copper 1.4%. Up markets, only one I really look at is what Con's up 0.3%. Natural gas, natural gas is pretty amazing. It's spring and natural gas is going up. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 186. Nasdaq is off 64. S&Ps are off 20. Coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down to 15, Nasdaq's off 69, S&Ps are off 23. Let's go over and take a look at Amazon. So, Amazon trading at a price point of $15.70. That you know, it's pulling back $30. You got a gap underneath it. Looks like it's going to get filled, 15.29. So that's game to get filled. Now, what happened in Seattle last night is this tax they put into place in Seattle. So this is, you know, when you add up the numbers aren't huge for Amazon, but
yes.
I suspect for other companies it's going to be pretty big. So what the Seattle City Council did last night, folks, they voted 9-0 to impose a new tax on large employees to raise $50 million in funding for affordable housing. The vote comes after, you know, intense debate, no doubt. What Amazon had done is that they stopped working on a couple buildings. Under the new law, companies bringing in more than $20 million in revenue would be required to pay a head tax, $275 per employee every year. Amazon has 40,000 employees at its headquarters, so that's a cost of $10 million annually.
In the span of about 10 seconds, Amazon just took in that $10 million, though. So
I know.
Okay.
No, I know. They started out with a head tax of 500 employees.
$500 per employee.
Yeah, then they got it down. But here's the number. Amazon halted expansion for office space that would house an additional 7,000 employees pending the outcome of the vote. So it's going to be intriguing to see, you know, what Amazon decides to do here.
And just to finish it, though, and then you had the mayor coming out with that, saying that that was too high, that she would have vetoed a tax that high. And so that's probably where part of the compromise came through, with instead a $250 employee tax, which they probably see as...
And I guess the way it works is that because it came in, and this was probably the negotiation, but because it came in, the vote was 9-0. The mayor can't veto it, period. That's what it says at the very top.
Maybe, okay.
The unanimous vote for the ordinance protects it from a mayoral veto.
Okay, nice.
You know, but we'll see where that whole thing is going to shake out. And there's no doubt that Amazon, that's not a lot of bread. But I guess
it's only companies that take in, what was it, over $20 million in revenue.
Right.
And you know, in Seattle in particular, you have housing prices that are through the roof that are causing some of that homelessness. So
yeah, there's no doubt about that.
To a certain degree, right?
It's a big number. It's a big number. So we get over. Let's go take the dollar. The dollar thus far tested the highs of yesterday. Of last week. Hasn't got to the December highs yet. The 30-year, because it's going to be all about rates now. It's about rates anyway. But bottom line is that this is, so the 30-year did break the low. This is going to be kind of cool. So watching this shake out. The low that we're talking about in the 30-year is the February 21st low. And so what you're going to see, let me just see this for a second, because the big deal that you're going to hear over and over again now, folks, is about what is the curve like between the 2-year and the 10-year. Because the theory is that the flatter it gets, the more probabilities that we're going to have a recession a year and a half from now or something. So the 2-year is at 2.562. So 562 is the number to remember. The 10...
We know that's a 305, right?
Okay, so that really hasn't flattened out that much. That's still, you know, basically 50 basis points. And that's what it seems like it's been at for a while. You know, the flatter that gets, meaning that if the 10-year keeps getting closer to the 2-year keeps getting closer to the 10-year, that is saying that in certain circles the probability of recession goes up. And I suspect what's going to be intriguing out here today is that we do have, I believe, one of the Federal Reserve, there's a new guy that is basically at the Senate today.
Okay.
Vakarul, I know, Fed news. Let's go like that. Fed. Maybe that would give me some Fed news. Calendar. Oh, this, okay, so here it is. Let me see if he's the one. Federal Reserve Dallas Robert Kaplan cautioned against policy actions that would push short-term borrowing rates above long-term yields and said the U.S. central bank should move gradually with its plan to raise interest rates. I, for one, do not want to, in the future, knowingly create an inverted yield curve, he told reporters in New York this morning. after speaking with at the Council of Foreign Relations. I'm very carefully watching the shape of the curve. Let's go to Mark in Massachusetts. Hey, Mark, what's going on, brother?
Not much, Tom. How are you?
Doing great, man.
Tommy?
Good morning, Mark.
Hey, so I heard you got spring up there finally, right?
Oh, my God, finally. Spring has sprung. Yep, the trees are out, the pollen is out, the bees are out, so it's all out.
There we go.
Basil's playing tennis outside. He's psyched.
Gotta love it.
Well, knowing Basil, I'm waiting for him to do his show outside, too, you know?
That'd be good, right at the tennis court.
There we go.
No doubt. Hey.
Yeah, remote location.
Yeah, totally.
Yeah. Okay, so you were I want to talk about gold, but before I go there, you talked about housing before.
Yes.
You know, we have the same thing going on in Boston that we have in Seattle. Boston, as you know, Tom, is going nuts price-wise.
I know.
You know, and Amazon said they're going to open some sort of a building up here with 2,000 people in it. And a lot of the people in Boston are saying, well, where is this going to go? We don't have the infrastructure there for it, and it's going to push property values even higher. And there's no where they want to go is down in the Seaport District, and there's no
South Boston. I know the exact building that they're in. Yeah.
Yep, and there's no transportation in there. You know, I mean, I guess they could run a bus line in there, but there's no subway.
There's huge transportation in there. Yeah.
Well, there's no subway.
No, but no one even takes a car down there. I mean, I know that area really well. There's buses that are coming out of South Boston. There's buses coming out of downtown. I mean, yeah, they get plenty of transportation, man.
Yeah. So you know, Boston has the same issue as Seattle.
Oh,
and
they do.
I'm waiting for someone to do the same thing in Boston that they did in Seattle. So anyway, I got a question on gold. About a month or two ago, Tom, you were saying a commodity bull run, and you think you were very bullish on gold. Has gold lost its luster?
Well, gold's doing an ABC down. Bottom line is that, you know, it is what it is. You know, to me, I'm looking at it like, okay, we'll see what shakes out down here at the 12. You know, listen, it can get into this 1275 area, here 1294. And we'll find out. You know, I'm still a bull. I mean, if that's what your question is, that's for sure. I mean, I'm loaded to the gills right now. You know, I like how the equities are still trading. You know, and as I said a little bit earlier, they haven't wrecked them yet. Because what happens inside the gold market is that it seems like it can hold up for a bit, and then all of a sudden it can just blow apart. Just stay right there. We'll come back. Okay. We'll talk South Boston real estate, too, with good old Amazon. I heard from my cousin James last night.
Yeah?
Yeah, he's selling his house in South Boston.
There we go.
$1 million bucks.
Totally.
Stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 160. Nasdaq's up 56. S&Ps are off 18. We're talking to Mark from Massachusetts. We're talking Boston real estate, and we're talking gold. You know, so just let's go back to real estate for a second. So this is really wild that to talk about this, of course, because South Boston, that's where Amazon is. They're putting more people there. That's where GE was going to put their headquarters. They're there now. I suspect Amazon's going to take over that building. Everything's $600 a foot there, and I got a call from one of my cousins, Tommy knows really well, last night. And so he's getting $1 million for his house, Mark, right? And I says, sell it as quick as you can, because I have a hard time comprehending that going up dramatically. But guess what? It has, but that's because South Boston has turned into downtown. You know? Sure.
Well, did you ever think in your wildest dreams, Tom, when you moved from up here to down there, that we would have this going on today?
Well, I knew Boston was always great, but as to the aspect of a Seattle or San Francisco, I'd say no. You know what I mean?
Yeah, I mean, Boston's a great town anyway. You
yes,
know,
right.
I'll put Boston above anything else. But, but I mean, in terms of real estate, you know, it's all wild. You know.
Listen, I was up there 2 weekends ago. I was going through a bunch of houses trying to figure out how people are affording them, and I still don't even comprehend how they can afford them. That
and
is.
I was talking to a real estate person about 4 or 5 days ago, and he handles mostly rental properties in Boston, Cambridge, Arlington, just in Boston and just outside. And I said, "Are you afraid of a real estate crash?" He laughed at me and said, "What real estate crash?" He said, "With all the biotechs up here, and now with Amazon coming in, you really think we're going to have a real estate crash?" And he just continued to laugh right at my face.
Yeah. No, listen, what does happen is that a lot of these places are still cash flowing at that price. But, you know, they're getting $2,500 for basically, you know, 600, 800 square feet, which, but it is.
Job market's strong in Boston.
It is.
Boston's
it's huge.
Quite a city. You know? I love Tampa, but Tampa isn't Boston in terms of the size, the
not
scope,
even close.
the jobs,
right.
Totally.
Right. So gold.
So I want to go back to gold a second.
Yeah.
Tom, would you say that short term you're a bear, long term you're a bull?
Well, on the equities, I'm still a bull. The equities still haven't even got hit here. You know what I mean? I mean, and realistically, I mean, I'm into the equities. I mean, I own gold and I own platinum, but that is a much. I don't even really trade those. I'll buy them when I think they're good and hold them 2 or 3 or 4 years. Do you know what I'm saying? The equities are a different ballgame. The equities, I'll actually, I don't want to hold those 3 or 4 years. I mean, you know, the equities still look all right. You know, the real question is going to be, and this is where that I would say that this morning that when this 10-year, I mean, if this interest rate structure really starts going high, commodities in general will get hurt big time. There's no doubt about that. You know, I mean, if we're going to go from a 3% 10-year to 4.5% 10-year in the next year and a half, you don't want to be in commodities because that dollar is going to be to the moon. You know,
unless it's possible oil. You know, oil's going to go gangbusters. Hey, speaking of oil, did you guys see the comment on CNBC over the weekend? CNBC.com. About oil. There's a handful of people who are controlling the oil market, and they're just bidding the price up to $100.
I did not.
I did see that headline, Mark, but I kind of didn't even bother to click on it because if you believe that a few people can control the price of oil, I mean, I'm sure I saw it's like the strong hand or something, but oil's quite a market, man. Kudos to them. If it was
that's not the first time I've heard it, Tommy. You know, I've heard that several times in the past year and a half, 2 years. So it makes you wonder, you know.
Yeah.
But anyway,
I think there's
question. Go on, Tom.
I was just going to say, it's quite a sensational headline, man. Take everything for a grain of salt. You know, I mean, putting things out that say the few people in the world behind the dark curtain get to control the price of oil. I mean, you can wonder, but that's quite a headline to get clicks. That's almost some clickbait, in my opinion.
Well, maybe. Tom, equities for today. What's your take on quickly on equities for the remainder of today?
You mean in the S&P?
Correct.
So if we take a look at this, it's going to be intriguing because we got a little pop down, but this is going to need, well, the volume's not bad, 72 million. It doesn't look to me like it's going to be a disaster out here, you know. Looks like the lows are probably already established. We're going to go sideways, and this is where it's going to get intriguing coming into option expiration, you know. If the volume doesn't expand as we're going lower here, that's saying that guess what? This thing's going to go make a run for the high once again, you know. So
yeah.
I don't think it's over just yet. Let me look at the Qs for a second. So the Qs, 16 million. You know, you're going into 32, so that'll do that easy. This is what's really wild about volume in general, folks, is that we went up with light volume. And so you went into a downdraft of the 19th of March. Now what happens, though, because you're over these high-volume bars end up being support on the way back down. You know, so now it's like, okay, man, if you're going to go lower, you got to get a big expansion of volume going. And it doesn't look to me just yet that that's what we're going to have. We're going to have an expansion of volume today, but you can see what you're coming into. You're coming into now just the opposite helps. 105 million shares, 78 million shares. This one will be easy to take out, 35 million. We'll do 35 million easy. You know, so this doesn't look to me like, you know, you're going to get a monster downdraft here. Not at this point. Let's put it that way. It doesn't mean that you don't get one more test again, then it blows out. The real question is going to be is that the 30-year and the 10-year, if those keep going down, I think that's going to down on price, high on yield. That's going to be a problem. You know, as we've been talking right here, they've both been making a comeback actually, and the dollar's been going down. So what will be really wild here is that if we get a total reversal out here today, you know, and the aspect of where this dollar trades. Let's just pull it up for a second because what we do know now is this: is that it's going to be rates in the dollar that drive this market. So it's going to be currency and rates. That looks like it's going to drive the market. You know, and thus far, you know, it's tested the high.
Tom, have you been surprised at the dollar rallying here?
Not really, because it hasn't rallied so long. I mean, I was looking for that December 12th test. It still missed it by 200 ticks last week. You know, once you get a rally going, you know, it's like, okay, we haven't had one so long, it should get up there. You know, now that's a technical deal. Fundamentally, you know, it looks to me like everything keeps going up on price. And if everything keeps going up in price, we're really going to have inflation actually kick in. And the oil price will have a kick in this quarter, you know, but between oil and gas, I mean, you know, and then it's going to be what's the real rate of inflation, right? Do you know what I mean?
Yeah. All right, Tom and Tommy, you guys have a wonderful day.
Great hearing from you, man.
Take care.
You too, Mark. Thanks.
Stay right there, folks. Tommy and I coming right back. Dow right now down 180. Nasdaq down 60. S&P's up 19. Coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow right now up down 190. Nasdaq off 62. S&P's off 19. And our man, Mr. Dave White, he is going to be doing a option expiration workshop, folks, tomorrow night, 5 p.m. He had a heck of a trade between Friday and Monday. Right?
Red Hat, man. And can we jump? Let's jump to Red Hat.
Yeah.
That was quite a. Can you pull up RHT? So Dave started getting into that with his subscribers Friday afternoon, I believe. He sent out an update. He talked about it Friday morning.
Yeah.
They initiated like half of the position, maybe initiated the rest of the position early Monday, and then, man, quite a cascade. And they had 170 puts. So I think they got in about $1.20-ish and sold out as it was approaching 165. Yeah, I'm good. About 1 o'clock-ish was when the update
like $5
went out to sell.
Right.
Yeah, and as Dave, I talked to Dave on the phone a couple times. He said, man, you got to take those profits no matter what.
Totally.
As in one of the errors that traders make most.
Right.
I think you brought up trading in the zone with Mark Douglas. Just talking about one of the errors people make, is not taking money off the table. In one day like that, going from $1.20 to $5. So anyway, just to illustrate, he's talking about Friday, talking about yesterday. I believe they have another option trade that's on there right now. Can't give away all the hints. People should go over there and sign up for it. So sign up for either Path of Least Resistance or Tech Insider. You'll gain access to the workshop tomorrow night, 5 till 6. And I'm sure he'll be talking about the methodology that went into that trade.
Right,
went
which is
into
cool.
the other trades.
Because he was given a range, folks, and he had the range down pat.
Yeah, it was
pretty
great.
cool.
I know you talked about it on your workshop yesterday. I sent out an email blast to just all of our clients, customers, just kind of talking about the trade, talking about the workshop tomorrow night. And yeah, just he was talking about where does that range come from? Where does he get it from?
Exactly.
What's going on?
Exactly.
Tomorrow night, he'll reveal what's going on.
It's a beautiful thing.
I got it. Let's see.
Stay right there, folks. We got swim lessons coming up next. And, of course, then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back, as well as Andy. Thanks, pal.
Thanks, man.
Dow, down 210. Nasdaq, 23. S&P's up 23. Have a great one, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.